Welcome to the Fearless Floyd Show. We'll begin in 40 seconds. Welcome to the Fearless Floyd Show. We'll begin in 40 seconds.
Don't catch no feelings. I come through with the style that's always revealing. From the block like the tick-tock, don't stop. I was at shorty, you know she was non-stop. I had the hot clot, chilling like a real god. Everybody know Big Juan was a so shot. You get high with the Don, here's the real supply. You get high with the Don, here's the real supply. It goes on and on, ain't no fucking questions why. The gangster love, get the real fucking supply. What? She came through, giving me more than I could.
Hello, everyone. Welcome to the Fearless Floyd Show. As always, I am your host, Fearless Floyd. And tonight, I'm proud to have back Wesley Keith Mullings. And if you're not familiar with who Wesley Keith Mullings is, he's basically a trademark class guru that we set up and we have over in Telegram. So if you're still interested in getting a registered trademark and you don't know how to do it, you need a class, and he's got it from just fundamental first step all the way to the very end, everything that you need to do. So yeah, I'm proud to have him back on the show. I've had him on before. He's been around the movement for a hot minute, and I would gather to say, without putting words in his mouth, that he's probably, been down the same roads that I have. Most of us have. Some of us have taken a different road to get to the same destination, but we're there. So I noticed that Keith had a new program, and I inquired about it, and he says, "Hey, here's what we got." According to Keith, it's legal in 44 states. And we can cover which 6 that it's not. That'll probably be much easier than covering the 44 that are, as well as Puerto Rico. Because I asked about Puerto Rico specifically, whether it was good in the territorial possessions of the United States of America, and that's what I received. So, the music that I had playing in, not the rock music, I'm going to change that up. But the other one, Take the Day Off, that's by my buddy, Pinche Juan C, as he says he is. But that's Juan C. Vasquez, my local friend, Houston independent movie producer, writer, actor, director, screenplay writer. He does the whole shebang. And I knew he rapped because we've done 2 music videos together. I had no idea he had a catalog. And he's got quite the talented, creative person. So, yeah, you never know what happens when you take somebody out and you're the designated driver, so they can get as bombed as they want. And you know what they say, loose lips sink ships. So it was one of those show me things. But that's a new intro. I'm going to dig into some more of his music, utilize it in my show. Me and YouTube are going back and forth on copyright issues, but I was like, hey, here's a cell phone calling. I'll holler at you later, YouTube. So without further ado, let me bring on our esteemed guest And I hope you get some education out of this. Hope you learn something. This may or may not be for you. We're going to find out. If you have any questions, leave them over here in the comments, because I don't want you to go away from this video without, asking a question to Keith, figuring out what this is really all about. Obviously, it covers renters insurance, homeowners insurance, auto insurance, as well as, I believe, the full spectrum of health, which would be eyes, dental, and health. And let's bring the man on himself. Wesley Keith Mullings, how you doing, sir?
Greetings, my brother. How's it going, Floyd?
It's going great, man. Just doing my thing every day. It's the grind.
There it is. There it is. Oh,
And
I'm
it is.
excited tonight, man.
Well,
So,
good.
There's a lot to share. I'm excited with everything that I've been able to assist people with, starting with the, going way back, how to travel properly, freely. This is a graduation into that, with the being able to show financial responsibility, as it is called in the law, where we're talking about auto insurance.
And clarify that for folks, because most people think, oh, I have to have insurance, but the actual legal term is maintain or proof of financial responsibility.
Yes, that's it. That's what it is called in the law. So that way we're able to accomplish what the law is dictating without falling into colloquialisms that, people just, oh, I just know it's called insurance. So this is a way to show that proof and to actually have something that the law can actually use. So we're not outside of compliance, which is the most important thing here. So being able to do that, the trademark is always an ace up the sleeve, or what I call a big joker. So we've got everything that is necessary. So, and there are a lot of people who are, after having a bad experience with either, a government agent or agency, oh, I just want to be left alone. Hey, we got you covered. We've got you covered. So being able to offer this financial responsibility, whether it's auto or homeowner or even renter, which to be able to have yourself covered as a renter, oh man, I'm just too excited about being able to do this. And then of course, healthcare, something that has been plaguing us all for what, 16 years at least.
Healthcare will be the number one expenditure of the federal government in the next decade.
Yeah. So this has a great opportunity to level the playing field, right the scales, balance the books, whatever way you want to say it, is a real opportunity to get that done. So I'm very excited about it.
I don't have any questions yet. So let's walk through this. Do you want to go through the auto insurance, what that looks like by category? Sure. Or
absolutely.
Or do you want to explain the whole thing? I do this with my guests when I contact them on the phone, and they'll start telling me everything about it. And I'm like, hold up. I want to be fresh on the show. So I don't want you to have to repeat everything to me. So that way I'm just as curious as my audience. So
sure.
Yeah, that's
I'm all for it.
Yeah.
So let me get myself set up real quick.
I'm talking more to the audience than I am to you, Wesley.
That's fine. Yeah, that's fine. Nothing wrong there. Let me
see if I have your. Man, I've been so busy. Whoops, wrong one.
Let's see. I think I gotta move this to.
Make sure another tab. Oops. Look over here.
Okay, there we go. And then I'll do the slideshow there. So when I do present, Share the screen. Okay. Okay, I think that is the screen I need to share. Okay. Everyone can see the screen, right?
No.
There we go. All right. So let me.
You pop them in there, I'll pop them up, and okay, you're controlling it now? Okay, perfect.
Yep, I got it.
Okay.
So basically, this is specifically for the Autobahn, or what people will probably refer to as either auto self-insurance for autos or auto assurance. All right. So this is specifically designed for secured party creditors, state citizens, sovereigns, and micronations. Now, as far as people who are not in these categories, it can work for those individuals, but what is necessary is that you have to have a trust. There's no exceptions. You got to have a trust.
Even
Whether
if
it's
you're one of these four entities on the screen, you still have to have a trust?
yes.
There you go.
And it doesn't matter if it's revocable or irrevocable.
That was my next question.
Yep, not a problem.
So could a private membership association, a jural assembly as well?
It could, but it has to cover adequately all of its members individually.
Right. Okay.
So if it's a collective, then there might be questions that might throw it back into the regulatory scheme where, okay, now you got to account for all these other people. Is this a pool or not?
Right.
So in order to avoid that,
mm-hmm.
to have an individual trust take care of the individual trust property as a one-on-one is preferable.
Okay.
Okay.
Got it.
So you're able to decide what constitutes a valid claim, not an adjuster. So basically the decision making is on you as either the trustee or the maker or, the grantor, right? There's this, now this is big. There are no premiums here. There are no copays here. There are no deductibles here. All right. You are able to keep your bonds as an asset rather than having to pay out for those same premiums. Now, legally.
Sure. Sorry about that.
It's okay. That reminds me, just in case I get a call. Okay. Legally, you're able to use the statutory provisions that already exist. When it's not new law whatsoever, it uses the existing law in order to validate what it is that's being done here. And we are able to establish and enforce fiduciary relationships that already exist because of how this program is being structured. We're able to show perfected. Go ahead with your question.
You said how it is being perfected, or it is perfected?
It is perfected. In the process, we perfect the security interest.
Okay.
All right. With UCC filings. So that way, when we are interacting with the offices that we need to interact with, we're already in a secured party position securely. And there's no question about it.
Define that for folks so they comprehend the spectrum of what that encompasses.
All right. To be a secured party goes based on the transaction itself. So each transaction may have a different secured party versus debtor, right? Mm-hmm. If you are transferring something to a third party, you, as the person who already has what's being transferred, you're the secured party because you already own it. The person who you're transferring to is the debtor, who has to give you a consideration in order to get what you have. So this operates in the same way so that you're able to function properly as the secured party for this transaction with this self-insurance product.
Got it.
Financially, the bonds that are offered are $3 million for 10 years. Cost on that is $2,500. Now, some people have asked, well, what am I giving you the money for? Because what I'm doing for this transaction is I'm functioning as your notary presentment. That's all you're paying me to do. I'm presenting the offer to the offices that are going to be accepting this, that the two of you can now work together. And that's what makes this, again, outside of the realm of any kind of regulation for insurance.
Basically, you've gone and connected all the legal dots, governmental dots, whatever that takes to effectuate this particular process for basically self-insurance, correct?
Exactly.
With a bond, a security instrument.
Yep.
Based on your trust, as well as being the SPC as a party to the trust?
Well, it's pre-funded. It's a pre-funded bond. Okay. So you're basically giving the agencies cash to say, hey, when a claim comes in on this bond, you're going to pay them out of that bond in order to satisfy whatever it is that they need.
Do they have the ability to take that bond as credit on account and then hypothecate it?
No, it is not hypothecatable. Okay. Because it is a private instrument.
Right. So they have to hold it, or they're just holding it?
They have to hold it. Okay. And it's separate from everything else.
So you no longer possess the bond in this case. You send it off to the governmental entity. They're holding the bond. Yes. And then in 10 years, it just expires. They send it back. Or what does that look like?
10 years, all right. So now I'm glad you're kind of doing this, because this exposes quite a bit of what we're doing, right? What we are doing is we are creating a contract between your trust and the state government. Mm-hmm. There are a number of offices that we are interacting with in order to make this deal. At the end of the 10 years or the maturity of the bond, whatever the balance happens to be on that bond is unconditionally transferred to the state's coffers. So now the state has an incentive to perform. That will encourage transparency, accountability, and a way to have everyone to get what they need done out of this. Providers, those who are covered, they're able to get those things paid for with very little issues. When the claim comes in on the bond, the state is now instructed to pay send us a check from the state to that provider. What bank is going to say no to a state check?
A warrant. No bank.
No bank. So it produces, just by virtue of who we're working with, produces a level of confidence not seen before when it comes to any kind of insurance product. Because you don't have to worry about the liquidity of the instrument because you're dealing with a private corporation. So that way, the government is actually able to function the way a government's supposed to function.
Yeah. Wow, that would be astonishing. Let me ask you this. Let's just say you're one of those accident-prone people that, everything seems to happen to them. And you utilize all $3 million worth of the bond within a 10-year period, do you have to re-up and pay another $2,500? Is it
Yes.
auto renewal?
Yes, that's it. You just continue creating more bonds.
Okay. So they come back to you if
Yep.
that occurs? Okay.
That's right.
And this is part of your structure underneath all of your layers of umbrellas of entities established?
Yes,
And
exactly.
I'm not going to go
Now,
through. You're more than welcome to address that.
oh, that's fine. Now, I'm not going to say that I'm the only one doing this or I'm the only one ready to do this. There's going to be a growing number of other people that are going to be in this space.
Sure.
I'm basically I'm only the tip of the spear. There's going to be plenty of others behind me, and they're all learning. They're all getting all of their knowledge base solid. They're getting their experience under their belt so that when things pop up or when they occur, they're not going to be at a loss with how to handle what's going on out in the world.
Okay.
So that way, it's not just a me thing or something that I'm the only one doing. No, there's plenty of others that are doing this as well.
Well, I see scammers written all over that. I'm just like, ooh.
Well, the good thing is this. I'll say this: the people that everyone that's going to go through me as far as the vetting of how this is going to go. I insist, and everyone who knows me, and they also know that I insist on only a few basics, which is operate with clean hands and in good faith at all times, under all circumstances. That's
Absolutely.
it. That's all you got to do. And if you show yourself to be that kind of individual who could be a scammer or is a scammer, revoked. Simple.
Is that in the language of the contract?
Yes, it is.
Awesome. Yeah, I see a lot of that happening. And, let's hope it doesn't happen, but I just want everybody to be aware that, now that we've done this show, and I'm not saying that, this is going to go viral and there'll be 10,000 copycats tomorrow selling private insurance. But it's possible.
I'll say this. And I can almost guarantee that no one's going to be able to replicate what I'm doing without going through me. Because number one, the funds are there. This is pre-funded. There's no other way to say it. It's pre-funded. So when I say $3 million, yes, the state actually has $3 million on deposit for that trust. Period. There's no excuses about it. No one else can do that.
Right. Can I make a suggestion?
Go ahead.
That you create something, I'm not going to say use this one. You could if you wanted to, but some type of logo like you have with your family crest, get it trademarked, and then have that as the seal of approval, your approval that this person, entity out here that's emulating what you're doing has gone through Wesley Keith Mullings, and they have the Wesley Keith Mullings seal of approval.
I'll actually take you up on that. Definitely. Yeah,
I would think that would be very helpful to the community for everybody. We know the other three things that are very valuable besides that. And that's time, money, energy.
Right. Exactly. Yeah. So this is a really, really exciting thing. So let me get in on some more of this. All right. I already brought in the fact that we're dealing with the state. So the state assignment of unused funds after the bond's term expires, what I just said about the balance being unconditionally transferred to the state for their own uses. So let's say in this situation, and there is a minimum. The bond is depleted, or it's been used as far as we can get it used. the state will at least be able to have $25,000 of that 3 million that they can use for themselves.
Okay.
So once the balance gets to a certain point, the person should be reaching back to us to say, hey, I need another bond. They'll go through the process. We'll do another presentation. The state will accept it, and we continue on from that point. So
Okay.
that way, we're able to keep that process going, keep it flowing. All right. Higher coverage limits. Because you are the deciding factor, there are no minimums or there are no ceilings as to what you're going to say. Oh, well, we can only pay this much, for this claim. If you need to pay the whole thing, pay the whole thing. Very simple.
Right. And
Very simple.
You and I briefly touched on this, and probably why you even brought it up is, last year I was involved in an auto accident, and the maximum payout for that liability policy was $30,000. That was it.
With this, if your damages that came out of whatever the situation was 100,000, you'd be able to pay that.
Right.
And let's say, for example, I'm getting ahead of myself a little bit,
Okay.
but let's say you totaled the car.
Right.
Now, with existing insurance, you might get an equivalent, level car, or you might get another car, but it's like slightly less or whatever the case. This is going to be the only insurance product that not only can you get the exact kind of car that you wanted, that you had before, you can actually upgrade the car. So if you started off in a Honda or a Toyota, you could theoretically go to a BMW, a Cadillac, or hopefully nobody's going this crazy about it, but I can imagine somebody's going to say, hey, I'm looking at that SRT over there with the Scat Pack.
Oh, no, they're over at Rolls Royce, bro, looking at Coleman.
Oh, right.
I don't know what you're talking about.
Oh,
they're going to go burn up that
here's
$3
the
million
thing.
like that.
Here's the thing, and this is why we have to be with clean hands and in good faith at all times. You are responsible for that $3 million. So if you spend it out in a year, that's your fault. Be smarter.
With great wealth and great knowledge come great responsibility. And
exactly.
When we get into all this, and I tell everybody, if you get there, this isn't for everybody. You're not going to run around your neighborhood, hey, everybody do this. It's, you might have an incident, and let's just say somebody runs a red light on your way to work, your car gets totaled, you got to go to physical therapy, but guess what? 3 or 4 days later, you got a brand spanking new car. And everybody's like, how'd you get a brand new car so quick? Oh, well, I have this private insurance. You have what?
Right.
Tell me about that. That's how it's going to work.
That's it. That's the only way it's going to work.
Conversations with people that just naturally pop up, they start talking about, oh man, my insurance is so expensive, blah this, blah that, or they're canceling on me, or oh man, I got a traffic ticket, now my insurance is going to go up.
Oh boy. Or they're complaining, oh, well, my premiums went up this month. And you're, what? Premium? What? Ooh, I hadn't seen those in years,
And what if you live in Florida or California or the Gulf Coast of America?
Ooh, imagine
flood insurance.
Yes. Imagine if those homeowners, let's just use California, right?
Okay.
The one when they had to go through the wildfires. Imagine if they had this kind of insurance. They could all be rebuilding right now.
Oh, they'd already be rebuilt by now.
Exactly. They'd be done with it.
Oh, well,
Oh, it's a fire. Oh, wow. My sentimental stuff got destroyed. Guess what? I'm getting new stuff.
you could literally, okay, if it wasn't, a $30 million house, but if it was within the $3 million ceiling, you could actually have a crew out there working 24/7 to finish
I
your
got
house.
something special for you, Floyd. I got something special. You're getting ahead. You're getting ahead. So let me finish this.
No,
All
I'm
right.
slow. I'm just some moron sitting behind my laptop every day just looking for stuff.
Yeah, absolutely. So let me get back to the presentation real quick. So now what this does, because of you being the deciding factor in the situation with a car, you're now able to completely eliminate repossessions. And you could access the funding for your bonds in case of, a theft or vandalism, or hey,
Hold
if
on.
somebody had a barnacle on the windshield,
Did,
or a boot.
did you just say stop repossessions?
Yes.
Oh God, you got a whole bunch of people's attention right there.
Because the thing is this, if you're financing the car and you missed one or two payments, you could put in a claim, hey, let me pay this whole thing off. And you're the deciding factor. You're not going to say no to you. So, hey, well, here's the claim. What do you want to do with it?
You're
I'm
not
going to
say no
approve
to
it.
you. There comes a time you're going to have to learn how to say no to you. This could
when
get out of hand.
When it comes to that
real
Rolls
quick.
Royce, that's when you got to say no.
Okay.
You can't roll up at the Lamborghini dealership.
Yes, you and I, we I cut it short because you can go do your thing, I can go do my thing. But I have stumbled on the private bank, the whole system, how it works. That the Masons, Knights of Columbus, the Odd Fellows, the Woodsmen.
Yeah.
I've never even heard of some of these secret societies, but
Yeah.
I got on that trail with artificial intelligence, and it was like, this is what they do. I'm like, oh man, I'm on something here. So
yes,
yeah, we'll definitely talk. That's a whole nother subject off of this, but you're like over there teasing in that category going, you feel me? You feel me?
Ali oxen free.
Right.
Marco.
Yeah.
So whether it's theft recovery, vandalism, damage, confiscations, impoundments, I mentioned the boots, the barnacles, hits and runs, you're able to satisfy what you need dollar for dollar, regardless of any of these situations.
All right. What is going to be your proof, your tangible physical proof of financial responsibility that you would present to law enforcement or a governmental official?
Well, in many states, and this is what I was mentioning to you about the 44 states that already have this as a part of their legislation. They already have the legislation in place that gives approval for self-insurance for automobiles. They already have it. Many people don't realize it or know about it because the thing that's shoved in everyone's face is, oh, go to State Farm, go to Travelers, go to, Prudential. But you can self-insure. It's written in the law.
Sure. Yeah.
So because it's written in the law, they have to give you the room to express it.
And what is do you have a certificate that you produce, or they produce themselves, or?
And the states don't produce a certificate either.
Right. But you have a card from your insurance company.
What I suggest to anyone is when they have their bonds and they have proof that the bonds have been accepted by the state, just keep that in the car. Keep the proof.
I did that and I got laughed at. when I presented it, and I was like, okay. And that's
Uh,
it. I just let that shit slide.
Yeah,
I didn't even
don't get upset.
respond to
Right,
it.
right. Because the thing that they cannot say is that you didn't do what you did.
Right.
They can't say it. So they'll go back to the state agency and say, "Oh, did you get this?" Or I had a dude that I pulled over and they had presented this, and the state is going to have to say, "Yeah, we do have that on account." So who's going to look stupid? Not you, because you told the truth.
You were in honor.
There you go.
With clean hands.
Exactly. And that's why we want to operate with clean hands and in good faith, regardless.
Right. Absolutely.
So, next, our advantages. There's no submission to insurance companies for terms, investigations, or any other red tape. We're able to get rapid responses because there's no middlemen here. This is your trust and the state talking directly to each other. You're able to protect all of the trust assets for its vehicles from traditional creditor claims because of the trust structure. So even if they wanted to impound or confiscate the car, it's trust property. You can't touch it. Period. This is for your protection.
Do the vehicles have to be registered in the trust?
Yes.
Okay.
They have to be the ownership of the vehicles has to be with the trust only.
So all the real and personal property that are assets of the trust have to be registered, licensed, bonded, whatever, in the trust name.
Not license. License is you as a driver.
Yeah, I'm just using that as a broad spectrum.
Yeah. Right. So, but as far as ownership, to show that, hey, here's the certificate of ownership with the DMV, yes, that has to show that the trust owns this.
Okay. That like if you had a food truck and you had to have a license to operate the food truck. It's a trust asset.
That is a commercial license. That's different. That's not the same thing as being able to drive it. All right.
No, not the driver's license to drive the food truck, but a license to operate the food truck.
Yeah.
The health.
That's what I mean.
Department.
That's what I mean. That's a commerce license.
Okay.
That's kind of the same thing as a brick and mortar, sale and use tax type thing.
Right, but it can't be in your name. It has to be in the
trust
whatever the trust LLC if you have it, or LLP, sole proprietor, whatever.
Exactly.
Okay.
Exactly.
Right.
And then, of course, jurisdictional control. You're able to operate from the private rather than dealing with a public entity. So, what we do, we help with creating the instruments and the whole package, with being able to provide proof that this was delivered and accepted. We give clear instructions on how to present what was mentioned earlier about if you're pulled over, or in dealing with claims, to give presentment to, let's say, if the person that has the private insurance is at fault, they'll be able to present proof of the bonds and liquidity to the other side with no issues.
Could you put ceilings on your payouts, like a fee schedule?
A fee schedule is if the other side doesn't perform. And when you're giving a payment, the only performance you're expecting is that they're going to cash it.
Well, let's just say you hit a Enzo Ferrari.
Okay.
And it's worth $4 million, not $3 million, and exceeds the policy. That's what I said. Is there a ceiling, like, collision pays out $100,000?
You would pay out based on whatever the balance is on that bond. If they're saying, okay, we'll accept this, and you have to set up another bond just to do it, you'll do that. But yeah, that's just a function of you got to set up another bond.
Okay, so the auto bond, would that work on, let's say, a RV trailer, those covered
Uh,
as well?
an RV, yes. The only limitation is that the automobile in question has to be owned exclusively by the trust, and it should not be used in commerce.
Okay,
That's
so
it.
technically, you could get a sport yacht, insure that,
Sure,
a
sure.
houseboat, a plane, helicopter.
Yes,
This is why I'm saying, these liability factors and who gets what, because you have the wrong accident when you're getting up in that level,
yes.
and boom, the policy might get
Goes
eaten up
higher.
by
Yeah,
somebody else.
absolutely, absolutely.
So you could actually, it would probably, if you had something, let's just say you were that wealthy where you did have a plane and a expensive boat. They're all expensive. I don't think there's anything that's a cheap boat. Uh, uh, but you may want to have more than one policy to cover each individual item
You could.
due to the value and liability of what could happen owning and operating that vehicle.
You could.
Okay. All right. I'm just trying to cover all the bases because nobody over here is asking questions in the audience.
It's okay. It's all right.
Yeah.
Okay.
So hopefully I'm asking them for all you guys and it's leaving you speechless.
That I do hope for that. That would be a great response. All right. So we're also including instructions for claims communication and processing, whether it is where you're at fault or the other side's at fault, or giving instructions or communicating with the state itself. And then it's structured to work within the existing legal frameworks while maintaining your status and not crossing back into the statutory commercial side of what we were trying to get out of in the first place.
Okay.
So, like I said earlier, you're directly communicating between the state agency and your trust. So this is a solution that offers a path to automotive financial responsibility. It honors your sovereign status while satisfying state requirements for your road use. Everything here is legal.
In at least 44 jurisdictions in the states. What 6 states does that not include? Do you know off the top of your head?
Let's see. I had looked at it once. I did not memorize the list. I think, what was it? Alaska, Hawaii, who else?
Probably the latest 6 states.
It was mostly the last 6 states, and I can't remember all of them.
Okay.
But yeah, primarily them.
Okay. It's not hard to find. So just,
No, not at all.
yeah. Okay.
All right.
That would probably be some information that you should put up on the website.
Right. So now we're going to hit let's see, let me get this over here again.
Thank you for hanging around after the show. I want to present to you Tailor Made Trust, featuring Ann LaFleur's Trust Series, available at tailormadetrust.com, as well as thefearlessfloydshow.com store. Here are a handful of the available trusts that can be built, custom tailored to your needs and desires. 25 different trusts, plus the DNA Trust Addendum. And as always, Ann LaFleur's classic trusts and ancillary classes, and also Ann's books on trust and specialty trust, which I also co-authored. If you'd like to get a class, a book, or have a trust custom built for you, always available at the fearlessfloydshow.com store. And I'll see you in the next show. Thank you for watching and have an awesome day.